Key work streams for launch, managing an investment bank process. This is lesson 2 of class 2. In this lesson, we will review the financial materials and marketing materials needed to take a deal to market. Background. During the first few weeks of the engagement, the client will work intimately with the deal team members to develop the necessary materials for preparation for launch. By launch, we mean taking a deal to market. The two main categories that will garner the most attention prior to launch are financial analysis and marketing materials. Financial analysis. When preparing financial materials, the Warren Fox Group believes practitioners should have a few goals in mind, such as clearly understand and communicate the client's current financial position, clearly understand and communicate the client's financial expectations, create viewer-friendly visuals for investors to easily digest during their diligence of the target company. Financial analysis. Goal 1. Understand the client's current financial position. Practitioners will provide the client with a list of financial due diligence items to gain a better comprehension of the client's current financial position. The junior bankers will have the responsibility of compiling and understanding the client's historical financials. Some important tasks to include are organize historical financials in one workbook, extract certain non-GAAP figures such as EBITDA, establish growth trends and profit margins, understand liquidity and leverage ratios. The junior banker will also need to look out for accounting abnormalities. Important abnormalities to look out for: aggressive revenue or expense recognition, transferring liabilities off the balance sheet, irregular treatment of certain expenses, large deltas between EBITDA and cash flow. Ultimately, the practitioners need to be comfortable with presenting the client's historical financial performance to the marketplace. Financial analysis. Goal 2. Understand the client's financial expectations. The client may or may not share a projection model. The projection model is a key item because the buyer will most likely price the deal based on the client's expected financial performance. The basics of a projection model. The projection model utilizes revenue and expense assumptions to drive the P&L statement 3 to 5 years into the future. A more in-depth projection model, known as an operating model, will include all 3 financial statements and will be dynamically linked. Key inputs to the projection model: revenue assumptions, gross profit margins, operating expense assumptions, and the understanding of when the client will break even. Financial analysis. Goal number 3. Create viewer-friendly visuals depicting the client's financials. The banker's goal is to make the investor's diligence process as seamless as possible. Investors look at hundreds of deals per year. Therefore, it is incumbent upon the bankers to present the financial analysis in an easily digestible manner and in an organized and accessible data room. Some helpful graphs and visuals might include near-term revenue projections plotted against gross margins or EBITDA margins, revenue and margin breakout by product or service, revenue and margin breakout by geographical location, near-term revenue projections plotted against SG&A costs, headcount projections plotted against headcount costs as a percentage of revenue, revenue of full-time employees or FTEs. Data room management. Some helpful tips for junior bankers when managing financials in the data room. Data room models are always values only. It is very rare for a banker to put a live model in the data room. Always keep the model up to date with the current monthly financials inserted into the model. Always highlight the client's current position and current run rate revenue. Never place a projection model in the data room with unattainable near-term projections. Always track which investors are looking at which financial documents in the data room, and always instill a watermark on any downloadable materials. Marketing materials. The Warren Fox Group believes that one of the most daunting tasks and time-consuming assignments for a junior banker is the creation of the SIM. SIM stands for Confidential Information Memorandum and is a comprehensive presentation document that will fully describe the investment opportunity to potential investors. The basics of the SIM. All sell-side investment banking engagements require a SIM. Depending on the client and the scope of the engagement, the SIM can range from 25 to 75 pages in length. The SIM must be created and finalized prior to going to market. The SIM will likely be made available in the data room for potential investors to view and download. Baseline composition of a SIM. These will include sections such as the executive summary, product and technology, industry analysis, company financials, management team, and deal structure. Section 1, Executive Summary. The Executive Summary section will introduce the client and provide an investment thesis for the opportunity. The goal of the section is to introduce and highlight the most compelling reasons for an investment. The Executive Summary section might include slides such as investment overview, company overview, why now, timeline and milestones, size of opportunity and TAM, high-level summary financials of the client. Section 2, Product and Technology. The Product and Technology section will provide an overview of the goods and services the client offers to the marketplace. If technology is in the title of the section, the client will likely offer some form of proprietary technology or tech-enabled capability to enhance its service offering and to provide a competitive advantage. The goal of this section is to explain exactly what the company offers, what the company does, and how it plans to execute its business model. The reason that technology is important is because if the products, the goods, and the services have a tech-enabled component, then this might change the way the deal is priced. It might change the multiples around the company or the client. The product and technology section might include slides such as product landscape, sales motion and sales funnel, go-to-market strategy, product pipeline, patents or intellectual property, product implementation. Section 3, industry analysis. The industry and market analysis section provides investors with an understanding of the current market landscape. The goal of this section is to highlight the client's position within the marketplace and describe competitive advantages that benefit the company relative to its competition. The industry and market analysis section might include slides such as company geographical footprint, competitive landscape, current market trends, supplier and vendor advantages, company customer highlights, unit economics slide. So the most important slide here is going to usually be the competitive landscape slide, which is going to have logos of the closest competitors, and then basically Harvey balls to show which attributes these companies have and don't have. And it's usually going to show the fact that the client has all the attributes when the competitors don't, providing a competitive advantage and a competitive moat within the broader marketplace. Section 4, company financials. The company financials section provides the investor with an overview of the company's current and future financial positions. The goal of this section is to highlight the company's historical performance, future expectations, ability to expand rapidly, leverage scale, operate efficiently, and return capital back to the investor. The company financials section might include slides such as summary of financial projections, historical financials, balance sheet and cash flow snapshots, future revenue growth and EBITDA margins, future revenue growth and fixed expenses, headcount projections, and business unit breakouts. Section 5, management team. The team and management sections provide investors with an overview of the company's personnel summary and key leadership members. The goal of this section is to highlight the company's human resources and their specific skill sets. Special attention will be placed on past work experiences, past management positions, and the educational backgrounds of senior leaders. The team and management section might include slides such as key management members and biographies, employee organizational chart, employee highlights and performance indicators, employee breakdown by function. Section 6, deal structure. The deal structure section provides investors with an overview of the current deal that is being offered to the market. The goal of this section is to highlight the key components of the deal structure and deal pricing. The deal structure section will differ based on the deal type, but will likely include slides such as key deal components, which describes the type of financing, the desired quantum, and the deal terms and pricing. Use of funds, which describes a breakdown of the capital utilization. Target valuation, which provides guidance on how the company and its advisors concluded on price. And company roadmap, which describes the future product launches and strategy of the business, complementing the use of funds slide. Thank you for tuning in to this lesson. We look forward to seeing you at our next lesson, which will cover developing a buyer's list.